Recording.
Good morning, sir.
Good morning. Good morning.
Good morning.
Divya.
Balaji sir. Hello. You are on mute. You are on mute. Hello. Balaji sir.
Number they'll become phone and
Taxation of trust and issues in ITR, sir.
Check the sanction salary pension included. Pension and pertain totally the constitution, salary pertain garnish, area pertain manchu. Amount in
Balaji, are you able to hear me? Hello.
Yes, sir, we are able to hear you, sir.
Okay. For a change, because it is not a physical meeting, it is, as this webinar, for a change, in the beginning itself, I will ask the participants to give some questions. I will not answer the questions, but I will make them listen through in my presentation. Somewhere else, I will give their answer at appropriate place so that they will continuously listen. Otherwise, everybody will switch on in the webinar and they may not be really listening to that. So if you say that your question is being answered during the session, they will attentively participate. That is, I wish. If you two concur, then we'll go with it. Otherwise, say at the end, we will take the question answers.
Okay, sir. Okay.
ശരിയായെന്ന് തോന്നുന്നു. ആവുന്നതേ ഉള്ളായിരിക്കും. കൊച്ചൻ വന്നത് നമ്മളും മൂട്ടാണ്.
A very warm good morning to all. Today we have the session on this taxation of charitable trust and recent amendments. So let us start with our ICA motto.
Yaesha supteshu jagrati Yaesha supteshu jagrati Kamam 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 kamamsho Pursho nirvimanaha nirvimanaha Tadeva shukram Tadeva brahma Tada brahma Tadeva amritamucchate Tasmin lokaha shataha sarvitadunatyadikaschanatyati kaschan etadvaita 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 etadvaita
To introduce the faculty and give relevance on this subject, I invite our respected Secretary K. Balaji to the session. Balaji, please unmute. You are not able to hear. Balaji, we are not able to hear you. So, good morning. Today we have.
Clear now?
Hello.
Is it clear now? Sahu, sir?
Yeah.
Okay. Thank you.
Please.
ഇപ്പൊ ഏറ്റവും നമ്മളെ കുഴക്കുന്ന ഒരു വിഷയമാണ്. We are finding it very difficult to proceed with taxation. Some of the issues are getting sorted, but the most catching thing was one of our very senior members very specifically put it across to the chairman last week. So we somehow put a lot of pressure. More than the seminar, it was very difficult to get PHALGUNAKUMAR sir. That is the kind of person he is literally on the move. He has specifically given us the time slot. Let us, without losing time, hear from the expert and then proceed on this matter. Well, over to you, PHALGUNAKUMAR sir.
A warm good morning to all of you. As the branch managing committee wished, actually 1 week ago, chairman has asked me, can you speak on tax audit? I thought for a change he is asking, and then I made him clear, sir, it seems part of the story only I delivered at Kumarakom, so maybe members may be asking for a trust, non-profit organizations audit and taxation. Then finally, the invitation has come specifically for a charitable trust. So in my view, and in some of my senior colleagues' view, audit of a non-profit organization which is claiming an exemption under the Income Tax Act is more complicated than a normal business tax audit. It is so complicated in the sense we are going to see today. The sections are only 3. For example, in business 28 to 44, though prime numbers are 16, with also other things also maybe 25 sections in the business, whereas for a non-profit organization only 1 plus 3, 1023C plus 11, 12, 13. Only these 4 sections are giving the exemption for these non-profit organizations. But even then, the law is mostly driven by the judicial precedents. Based on the judicial precedents, the government has amended number of times these sections. So these amendments are making it difficult for us to understand what is taxable, what is exempt, what is not taxable. The second part, though you understand the law 100% correctly, filling up the ITR 7 is another nightmare. Why? Because the ITR 7, which is for exempted income, entities to file and claim the exemption. For several types of exempted entities, only one form is given. For example, if it is 1023C itself is having, 8 types of institutions, which we are going to see. Without any approval or registration, income claiming entity also has to file the ITR 7. With approval, 1023C. With registration, 12AB. They too have to file. 1046, government promoted societies, entities, any type of institution, government promoted, controlled, managed. They too have to file ITR 7. Scientific research section 35, which claim registration and exemption, they too have to file ITR 7. So not only this 12AB, all other types also have to file the ITR 7, including local authorities, municipalities, panchayatis. By chance they have any business type income, which is not as per the Indian Constitution 245W clause article. So they too have to file this ITR 7. So in the ITR 7, you will find 5 heads of income and these exempted sections. So how to fill it up is the second part difficulty. So to fill it up ITR 7, first one must be thorough with the exemption conditions, provisions. If you understand these exemption conditions, provisions only, you can fill it up properly. Otherwise, filling up ITR 7 will become a difficult thing. So to understand this, we'll start with small examples, small sections where without registration, these exemptions are there. So I will share the screen. So I request the organizers to permit me to have this sharing of the screen. Screen sharing. So there, How full screen is not coming, sir? How to get the full screen? Shared screen is not coming here. Yes. Slide show. Sir, now are you able to get the screen, sir?
We are
Anybody?
able to see it, sir. Very clear. Please
Okay,
proceed,
okay,
sir.
okay. Now full screen has come. Okay. So the exemption sections are, as I told you, 1023C. 1023 is having, without any registration with the income tax department, you can claim exemption if it is funded by the government, being an educational institution. For example, all the state government promoted state universities, central universities, if their government grants, both revenue and capital, are exceeding in their receipts more than 50%, they can claim their exemption unconditionally, but they have to file their return within the due date. So majority of the universities are not filing the returns, are not getting their audit by chartered accountants, which is a fact. So they too, as per the Income Tax Act, their income is unconditionally exempt, but they have to file the return. The only condition is more than 50% of their revenue, gross receipts, must be from the government. Why the state government universities sometimes are not getting that 50%? State governments and central governments, for example, JNTUs, every state government is having JNTUs, technical universities, for which engineering colleges are affiliated. These JNTUs mostly are not having more than 50% of the government grants, means the fees they collect from the affiliated colleges, for examinations from the students, that itself is more. The government's intention is initially to finance these universities, but over the time to make them self-sufficient. For example, in America, government funding to universities very, very less. Very, very less means very insignificant. Every university on self-sustained basis are running. They have more interaction with the society. University directly services with its research, with its knowledge, the society, so that it gets the benefits from the society and it runs the university. So similarly, in India, the government's intention is to make the university self-sustainable with its own. Secondly, universities are running some courses on self-sustaining basis. Some courses are with the government grants they run. Some courses, the fees must be equal to the administration expenditure. So like that, for example, here in Tirupati, the Venkateswara University, which is a good old university, it runs MCOM, two types of MCOM. One type of MCOM section is government grants purely based on merit. Secondly, MCOM self-sustaining, self-financing, otherwise say. So self-financing courses they run. So the students are admitted based on the fees, which is equal to the administration cost. So this is the first type education. Similarly, government grants medical, health care, hospitals. Central government in every state has promoted one or more super specialty hospitals equal to AIMS, All India Institute of Medical Sciences, which is there, the biggest hospital where all the central ministers, MPs get admitted in case of ill health. So similar AIMS based hospitals are being promoted by the central government in each state government. State government itself is promoting in each district super specialty hospitals. So when the government is funding, nominal fees they collect from the patients. If the government funding is more than 50%, they are automatically, without any approval, exempt. But it is year to year they have to look after. By chance, in 1 year, it is falling below 50% means because they don't have the approval or say registration. 1023C registration is otherwise known as approval. 12AB registration, which is from 22-23 assessment year up to 21-22 assessment year, we were having without any renewal perennial registration 12AA. That 12AA ceased to operate with the 21-22 assessment year. From 22-23 assessment year, we are having the new section 12AB. So this 12AB registration holding people only can claim under section 11 their exemption. This is from 22-23 onwards, subject to again satisfying several conditions. So in the slide which I am showing you, the first two are government funded, naturally government managed institutions, education institutions, medical relief institutions. The second type, which every street corner you will find an elementary school, a high school. So this is the below 5 crores gross receipts if they have. Below 5 crores gross if they have for 22-23 assessment year. For earlier 21 up to 21-22 assessment year, the limit was 1 crore. Earlier, the 1 crore limit was for each institution. For example, if a society is owning one high school, one +2 college, one BEd college, for each institution 1 crore was the limit. But now all the institutions put together for one entity, one legal entity for one PAN number, 5 crores is the annual limit. If the gross receipts are less than 5 crores, then if it is existing solely for education, no other object should be there. So if it is solely for education, small institution, the government, just like our presumptive taxation 44 AD, without any condition means here only one condition is there. Anonymous donation should not be there. 115 BBC, which we are going to see. So except that anonymous donation shall not be there, this purely solely existing education institutions up to 5 crores cross limit without any registration, without any approval, can claim their income exempt. No conditions means 85% application is not there. Even shortfall, no question of Form 10, Form 9A filing. So like that, they are having this exemption, but they too have to file the return. For that matter, whether it is a public religious temple, non-profit motive, public charitable institution, charitable purpose, as we all know, we are going to see once again. All these non-profit organizations, if their gross receipts exceed 2.5 lakhs, they have to file the return. And in some cases, as we are now seeing, without registration, in other cases, with registration only, they can claim the exemption. We will be seeing every street corner a temple. Per annum, if it's gross receipts without deducting any expenses or exceeding 2.5 lakhs, as per Income Tax Act, it must, a temple, a church, a masjid, they have to get the registration and then claim the exemption. Otherwise, say automatic exemption is not there without registration. It is only for educational and medical relief, that is hospitals. So for any other thing means you are having in the charitable purpose, relief to poor. Kerala, floods have come. 10 of you chartered accountants join together. You will collect the donations from your clients, rich clients, and you want to give relief to poor. Relief to poor is no doubt a charitable purpose, but without any registration, your gross receipts are taxable. For example, if you collect 10 lakhs and give all the 10 lakhs, total 10 lakhs to poor people only by purchasing the clothes or say food materials, ultimately you will end up paying 3 lakhs from your pocket. Who are the organizers? How the department will know? Nowadays, generally, you will collect it by checks to be more transparent. Sir, we don't want cash. So, by chance you open flood relief committee of what I am. That flood relief committee, you open a bank account CAs are there? Sir, any questions are there?
No, sir, no questions.
Kindly mute the others, please. Again and again. So, if 10 of you join together, wants to construct a temple in a street corner, or do a flood relief activity, any charitable activity, then if you open a bank account, automatically the department. So the Income Tax Act insists on the transparency by registration only. So the without registration, many schools, as I told you, wife and husband being teachers in a government school, they think that they can start a school. They will register a society. They go to the district education officer. They get the permission to start a school. In their own building, they start the school. But after getting the government recognized elementary school, they forget to comply all other sections. They don't maintain the accounts. Yearly, they don't approve it in the society annual general meeting. They don't get the accounts audited. They don't file the returns. Sorry, yes. Sir, a lot of noise is coming. Can anybody stop that, sir? So, the school starting is easy. The school starting is easy, but they don't maintain the minutes book of the society.
Kumar sir, can you mute from there?
Pardon?
Can you mute all the members from there? Because
I cannot. Only the organizers who gave me the permission. The administrator has to mute. I cannot mute. I am only one of the participants.
No, now you are the host, so you only.
No. You take it that also host means I must concentrate on my subject rather than who is unmuting, who is muting. Please. The organizers have to. I'm not having those rights also, sir. Please. So the automatic exemption.
Sound.
So I request all the participants to be in the mute mode, please. I request all the participants to keep in mute mode. Otherwise, say the noise, the total program will go.
Okay, sir. Now it is corrected, please, sir.
Yes, please. Now I'm thankful. So you have sorted out the problem. So the automatic without registration in given, especially the schools which are having below 5 crores from 22-23 assessment year, must file the return within the due date. So the compliance exemption is given means it should prove itself as a non-profit organization. Most of the times, especially in the months of February, March, the income tax people are having a fascination to collect some more revenue. They go to these educational institutions, they conduct a survey 133A. Up to 2016, they were not having survey means 133A only for business premises. Now for non-profit organizations also 133A section is amended. They can, if they go to that school, sir, we are below 5 crores, we are exempt. Exempt, you prove yourself that you have satisfied all the other conditions. You are registered as a society. Have you maintained the books? Every year have you got books audited? Every year have you got them? Not under the Income Tax Act, there is no audit report. Under the Societies Act, audit is a must. If it is a public trust, audit is a must. So they would not have got the audited financial statements to produce. Last 6 years books of accounts they should preserve. So simply seeing that below 5 crores exempt, automatic exemption, if they are not satisfying all these things, for not filing the return, the penalty itself is there. In addition, these other things are also get attracted, and other things means generally the schools running people, as if it is their proprietary concern, the money they use for personal purpose. Though the account is in the name of the school or society, the money they draw many a number of times. They contribute for chit scories. So automatically the violations will surface. As a transparent public benefit organization, they will not be able to prove. The department will prove as it for the personal benefit of those promoters the society is run. Thereby they lose the exemption. So the limit of 5 crores, one must carefully comply, then only automatic exemption will be there. Then I will go to with approval with registration. So the 1023C is having, 1020C is having, in addition to the above 4, the following 4 also it is having. What are they? Purely charitable institution. For example, our CA Institute, all these years has been claiming its income exemption under 1023C4. So it is a charitable nature, CA Institute. Even this was questioned by the Income Tax Department in 2014. The income tax, why can't we withdraw the registration given to, sorry, the approval given to you? 1023C is known as approval, 12AB is known as registration, 12AA or 12A. So the CA Institute filed a case in the Delhi High Court. Finally, Delhi High Court said CA Institute is a charitable institution. In the department shoe, CA Institute is not a charitable institution which has claimed all these years its income exempt. So similarly, religious institutions, just you find Tirumala Tirupati Devasthanam, all these years it has been claiming 1023C5, a religious institution, public religious institution. So temples of a substantial income must seek this approval, thereby their income is exempt. But for all these things, charitable, religious, educational institutions above 5 crores, 1023C6, medical relief, 1023C6A, above 5 crores. So these institutions, together with 12AB institutions, must satisfy not less than 20 conditions, but important 10 conditions we are going to see in the next few slides. So unless they satisfy these conditions, what is it? For example, as we all know, 85% of their income in the same year they should apply. The word apply means both revenue expenditure, capital expenditure. So like that, the conditions to be satisfied. In case shortfall is there, either they can choose to apply the same in the ensuing immediately following year by filing Form 9A, or within the coming 5 years accumulated amount they want to acquire any capital asset or any specific purpose, then Form 10. And once you file Form 10, that accumulated money should be in identified earmarked deposits or investments. So like that, several conditions are there. With these conditions only, these things. So till 21-22, without any further renewal, once you get 12A registration, 10 years back, 20 years back, that is, it has been continuously given. Now the government has changed this registration procedure from 22-23 assessment year, unless you have a fresh registration, 12AB registration, to whom they have given already existing 12AA people, it called it as renewal for 5 years from 22-23 to 27-28. It has given 5 years renewal, or those who were not getting the, were not enjoying, were not having 12AA registration, if they apply now in this 21 April to 22 March period, for them it has given a fresh registration, otherwise called as provisional registration, valid for 3 years only. And after getting this provisional registration, once again, they have to convert this provisional into regular registration of 5 years. For that, 10AB has to be filed. Some people within 6 months, they could not file. So now the date is extended up to next month, September 30th. So those who got a provisional registration under 12AB, being fresh registration, they have to get it regularized. So by filing form 10AB, for that, the time is extended up to September 30th. Now, 1023C. 1023C, just like 11, 12, 13 sections, what all that is there in 11, 12, 13 sections, as I told you, the conditions is having 23 provisos. 1023C is having 23 provisos and then 16 explanations in these for these 23 provisos. And let's read together all these things, how this 1023C 8 clauses can be understood. Without this, one cannot understand them. So, 1 minute, please, 1 minute. So, this 1046, what is this 1046? As I have already told you, urban development authorities or some other port development authority, the government promoted, government controlled airports authority, the government promoted, government controlled specific activity oriented institutions can go for 1046 registration also. If they go for 1046, they cannot claim 1023C or they cannot have simultaneously 12AB registration. So this is one route given for government societies, government corporations, government entities. So now earlier, some 5-6 years back, section 1023C conditions and section 12AA conditions were different. Now with this 2022 Finance Act, 2022 Finance Act, almost all the conditions that are there in 11, 12, 13 are brought as provisos and explanations in 1023C, except 2. What are those 2? The difference between 1023C and there is no difference now. Almost by next year, the government may make them equal and they may merge also. They may merge also. These 2022 amendments are giving a sign that both routes are one and the same, whether 1023C route of exemption or 12AB registration coupled with section 11 exemption, or both are going to become one and the same, except 2. The number 1, in the section 12 capital A subsection 2, a extraordinary benefit is given in the sense any charitable or religious organization, public charitable organization, in the earlier years, though it was having some taxable income, if by mistake it has not obtained any registration, if it is going to obtain in any year now, if the registration, either under 12AA earlier or 12AB even now, the amendment, for all the earlier years also, it can enjoy the exemption if there is no change in the objectives. So this is a benevolent provision, 12 capital A2 with 3 provisos, first, second, third provisos provided. So one can enjoy for earlier years also without registration, the section 11 exemptions, 11 and 12 exemptions. Such benefit even now is not there in 1023C. This is the first thing. Second thing, in case you are not able to apply 85% application of the same year is there both for 1023C and 12AB registered public, religious or charitable institutions. But in the case of 12AB registered institutions only, in 1 year, if you are not able to, simply by filing form 9A, in the immediately following year, you can apply the same. So in the second year, whatever you apply, first part you remove whatever the earlier year shortfall, you remove, and the remaining only as if second year income, second year application will be there. So whatever you could not apply in the earlier year, immediately in the following year, you can apply by filing form 9A for all your general purposes, maybe salary, maybe rent, maybe transport, maybe general expenses. No specific purpose like Form 10. This Form 9A also shall be filed electronically before filing of the return of income, which is specifically available for 12AB registered institutions only. For 1020C, it is not there. Except these two differences, now there is no difference between 1023C approved institution, which claims exemption either as an education institution or as a medical relief or as a public charitable institution or as a public religious institution. So the same thing is available in 12AB registered also. Now, what is charitable purpose? We have to be very, very clear. Though you have studied several years ago while CA Inter itself, you would have studied. But now the need is there to understand them, because the words used here have not been defined. Charitable purpose includes inclusive definition. Relief to poor. What is meant by relief to poor is left to the general opinion. Similarly, the word education is not defined. There are not less than 200 High Court and Supreme Court decisions, leave alone the tribunal decisions. What is education? What is not education? Courts have decided the word is not defined in the Income Tax Act. For example, if one runs a hostel exclusively on non-profit motive only for chartered accountancy students, it is also educational society. It can be registered under 12AB. You are running only a hostel, no course, CA course. You are only running a hostel, no teaching. Even then, some society will be only for scholarship to some engineering students. We want to give scholarships only. Its object is promotion of education. Then also it is an educational institution eligible for it. Then, sir, IAS coaching institution. It is not education. No question of giving 12AB registration. Its income is fully taxable. So coaching institutes, even if it is for UPPSC examination, non-profit motive, even then, this is a IAS coaching or any competitive examination coaching is not education. So the education word itself has got several, for example, on the lighter side, in Chennai, there is a newspaper, Tanti Trust. It is a famous landmark nation. Newspaper also said, I am running this as a non-profit organization. Every day, people in the early morning itself wait for my newspaper daily to read. I am also educating the paper, educating the public through my paper. So the High Court said, yours is not an education institution. Though daily you print the paper, daily you make lakhs of people read your paper. If we allow you that you are educating, then every thief is also educating the person from whom he is going to steal, because that person also learns a lesson from the thief. So that is also education. We cannot equate. These are the words given in the judgment. So like that, what is meant by education is very, very difficult. So one has to understand. Now, in the normal sense, any government approved certificate or qualification, if you are going to give, definitely the government approved certificate course, these things can be called as education. Then yoga. Yoga is also nowadays, many people start yoga classes as a non-profit organization, just like your Rotary Club or say Lions Club. If you start a yoga club and daily morning, evening, you make the people participate in it, definitely promotion of yoga is all right. But in the name of yoga, in the newspapers, you will be seeing nowadays Ayurvedic nutraceuticals, some extra products they want to sell. So is it part of yoga? No. So pure yoga in the classical definition of chitta vritti nirodhaka. So that is a yoga. So in that original sense, main activity only if you take up, it's all right. But on a commercial sense, if any activity is taken, it may not fall. Actually, the courts have decided already. So the medical relief, the word is not only the ailments curing, but the convalency. That is in the sense, the physiotherapy. So the clinics, identifying diagnostic clinics, they're all coming under medical relief. Diagnostic clinic is to identify where the disease is there, defect is there in the body. So they all come under the medical relief, where if they are non-profit motive, but the medical relief word one cannot extend to other general health care, general immunity boosting medicines I want to sell. It will not come in the medical relief. Similarly, preservation of environment, we all know now ecological balance is at stake. So these are the latest things added. Similarly, preservation of monuments of importance of artistic and historic importance. Seventh is another type, advancement of another object of public utility. Why? Because the advancement of another public utility, which is not falling in the first six, will fall in the seventh one. For example, Malayalam literature promotion, Kathakali promotion, art promotion, music, Carnatic music promotion, sports, cricket promotion, football promotion. So any other thing, even including Goshala, cows, this thing, old age home, won't have. So these are all coming under advancement of another object of public utility. Once you are having advancement of another public utility, the definition 215 is having two provisos. You should read those two provisos together with the seventh one. For the first six one, those provisos are not applicable. So the two provisos are going to say that in case under this head, which is falling an activity advancement of another object of public utility, if it is collecting any money in the nature of trade, commerce, or business by way of fees, cess, or any other consideration for the goods supplied or services rendered, such fees, cess, or consideration received for the services rendered, then if such receipts are exceeding 20% of the total organization's receipts, it is no longer a charitable purpose. Example, you are running a Carnatic music school. You are not giving any certificate. You are making them learn, because universities are also having music departments, B music, M music, PhD in music. Every university is having, many colleges are having, but they're all government approved. But you voluntarily promoted one music promotion society and you are teaching the students, but how long you can teach with your money? So you are collecting some public donations and a nominal fees you are collecting from students. The nominal fees what you collect should not be more than 20% of your total gross receipts, donations and other, maybe FDs, interest, all other income put together. This fees from students should not exceed 20%. If it exceeds 20%, then you are no longer a charitable purpose, though you have 12AB registration. Then you will lose your section 11 exemption. Normal under 5 heads. If you have registration, 5 heads computation will not be there, only computation under section 11, 12 and 13. If you lose your register, this 20% status, in the next year you can have again below 20%. So for that 1 year only, 12AB registration is not going to affect it. So one must be very careful in dealing with this advancement of another object of public utility status. So the auditor, what for we are now understanding all these basic provisions, you are issuing a certificate, maybe for 1023C, 10BB audit report, maybe for 12AB registered 10B audit report. That audit report shall be given on or before September 29th. The audit report shall be uploaded by September 30th. The return shall be filed by October 31st. 1 month before, 30 days before the due date of filing of the return, the audit report shall be filed. The audit report shall be filed only after the completion of the audit. Audit shall be done before the due date for the audit. So September 29th, you should do the completion of the audit. So now, if you don't follow the timelines, exemption is gone. And for approval, again, delay condonation, you should go to the commissioner. Okay. This advancement of any other object of public utility, so far what I have said is there in this slide. That is, if it is of the nature of trade, commerce, or business. What is meant by trade, commerce, or business? Many people, many income tax authorities interpreted this in several ways. For example, as I told you, for a church in Tricur also, the department gave a notice. Your income side, if you see, 80%, 70% is shops let out by the church, rental income. So you are having commercial income. So yours is not a public this thing. You are not, though you have 12A registration, you are not entitled to. First of all, this advancement of any other object of availability should form part of the charitable nature, not religious. For religious institutions, this question of application will not be there, this provision. That itself is the wrong done by the income tax authority. Secondly, the nature of an activity, not merely by seeing the income side, by seeing the expenditure side, payment side, that in that income and expenditure account, you should see the church, though it gets the rental income from shops, 80%, 90% of its income it is spending only for religious church administration, church running only it is spending. Then it is a religious institution. So by the expenditure only you should decide its nature, not by the income. So here, for example, one Goshala in Gujarat was selling the milk, selling the dead cow's carcass. So it is having some income. So go rakshana is nothing but advancement of another objective, because Constitution said preserve the nature, preserve the animals also for ecological balance. All the animals you should preserve. So the definitely it comes. So 12A registration it got, but its income side more than 20%, selling of milk, selling of carcass. So the department interpreted as you are buying the grass, major grass, somebody donating, but you are buying the grass and selling the milk, then it is a business, then it is a trade, then it is a commerce. So the court held that with an intention to earn income, buying for 95 rupees, selling for 100 rupees is business. But here cows preservation is the main object. A cow has to be preserved means grass has to be necessarily bought. Once you preserve a cow, its calf 100% cannot drink the milk. So the excess milk has to be necessarily sold for public. And when it dies, its leather, carcass also has to be sold. It is not in the nature of trade, commerce. Court held. So like that, this advancement of another ability, many people sell Kathakali, Bharatanatyam, Kuchipudi, dance. Once in a year, they will have a festival. They will sell the tickets. Instead of selling the tickets, they give the tickets to public to receive as a donation. So instead of calling it as donation, they say, tickets, please. So the department will interfere. Yours is advancement ability. You are in the nature of, because the money you receive is more than the expenditure you are incurring. With a profit motive, you conducted this festival. So definitely it's business, the department will say, but we have to establish. So number of case laws on this side, that side. So one must be very careful, because the words used in the section are any fees, cess, or any other consideration. Whether the service is rendered, you are collecting some money, such money shall not exceed 20% of the overall receipts. Overall receipts of the organization. If it exceeds, it loses its character as a charitable purpose, and section 11 exemption it will lose. So now, anonymous donations for religious institutions, it will not apply. Hundial collections, hundi, they keep, they collect. So religious institutions can collect, charitable institutions cannot collect their money through hundi. So this is section 115 BBC says, if at all you are having anonymous, what is meant by anonymous donation? The donor's name and address is not traceable, not identified, not preserved. The donor's name and address, if you are not preserving, then it is anonymous donation. So if such anonymous donations, if they exceed 5% of the total donations, not 5% of the gross receipts, in that year 5% of the donations, total donations, if they exceed 5% or 1 lakh, whichever is higher, then from the sum total of anonymous donations, this basic limit is exempted. Remaining anonymous donations are liable for tax for 30%. You cannot claim any expenditure towards that. So from your gross income, which 85% you have to apply, this taxable anonymous donations you remove, remaining donations and other income put together, 85% you have to apply, the other conditions will satisfy. Now, as I told you, the unconditional, unregistered education institution 1023 small 3 AD or AE healthcare, the 5 crores is aggregate income. There were 2 case laws which were say this case law which I have quoted is what is meant by 5 crores from the main activity. By chance, if they are having on their FD some interest, schools means for recognition sake, you should make an FD. An engineering college, you should make an FD. So the interest and donations shall be excluded from gross receipts. This is one decision of 2021 October. It may be useful for some people where they are in the borderline, so they can have this thing. So the accounts and audit, all the non-profit organizations must maintain their accounts as per the normal accounting principles. And the financial statements, the institute has recommended for all non-corporate entities on June 2nd, 2022, the GA Institute has given non-corporate entities financial statements format they have given for the first time. So this format is applicable even for public charitable religious institutions. So we have to follow that, though it is recommendatory in the initial years, it will become mandatory after some time. So we, just like a corporate financial statements are columnar, and then previous year figures also has to be good. Lot of schedules will be there. So in that format you have to give, and at the end, disclosure of accounting policies must be there. So the accounts must be read together with the notes and accounts. So now we are coming to the crucial part of 10B and 10BB. So if you are having registration to claim the exemption, the 10B form has to be filed before filing the return of income. The 10B is the audit report. When it should be filed? 1 month before the due date of filing of the return, the audit report, just like your tax audit report. What is the difference between a tax audit report form 3CA, 3CB, 3CD filing and this thing? They also before September, that is by September 29th, the audit report shall be signed, and then September 30th, they should be uploaded here also. But there, 44AB, if you are not fulfilling the audit report in time is not filed, 1.5 lakhs maximum penalty will be there. The business income is not going to be taxed otherwise. Whether you file the tax audit report or not, the business income is taxable as business income only. But for not getting the books audited, sometimes when the books are not there, for example, a person is having 500 crores turnover in the bank, all the receipts. He was doing illegal mining. So his business is not licensed. But people from him bought the mineral. Where from he got, nobody asked. So their turnover is 500 crores. Not for a single rupee purchase, bill, invoice, nothing is there. Leave alone the GST registration, leave alone the bills. Now such person comes to you to file the return. What you have to do? Sir, no books, no audit, so I will not file the return. One should not say. You have done a business according to you. How much you purchase? Sir, this much, sir. How much you have sold? Yes, sir, 500 crores. Without any audit report, file the business return, prepare the P&L account, what he said, prepare the balance sheet on single entry basis, without any books of accounts. So you file the return. At best, what the department will do? It will convert into scrutiny. No audit report, 500 crores. The assessee must be in a position to prove that, yes, I incurred the expenditure. Those who are having GST registration, 100% purchase through invoices, 100% sales through invoices, how much GP they have shown? Same GP will be there for me also. So maybe 3%. I am giving you the live example, experienced example. not a hypothetical example. So a number of decisions, when the books of accounts are not there, income shall be assessed by estimation 145.3. So the section 145.3, no audit report, don't worry. For no audit report, one penalty will be there. Actually, the decision say, when the books are not maintained, where is the question of audit? So for not maintenance of books of accounts, one penalty is there, 25,000. Please levy that non-maintenance of books of accounts 44AA, that penalty 25,000. Not even the non-audit penalty of 1.5 lakhs. Only that non-maintenance of books of account 25,000 penalty, and the business income is estimated. Number of tribunal decisions, number of high court decisions. For example, the liquor business, trading only. Then they don't maintain the books of accounts. Liquor shops, 90% they don't maintain the books of accounts. What is it you have to do? Estimate the income. Such a thing is not possible for non-profit organizations. For non-profit organizations, sir, my income, please estimate, give the exemption or levy the tax. Nothing doing. Gross income will be taxed here if you say once no accounts. Gross receipts, donations, gross receipts will be taxed as income. Decided cases. So one must be careful to maintain the books of accounts. Once the basic limit of 2.5 lakhs, gross receipts cross, you must maintain the books of accounts, the assessee, and the auditor must get them audited, and in-time submission of the audit report. In-time audit report is not submitted for a charitable institution. Section 11 exemption is gone. 10BB audit report for 1023 is not submitted in time. 1023 exemption is gone. Once the exemption is gone, the income is becoming taxable income. So there is no question of condonation of delay for filing the return of income, belated filing of the return of income. The return of income shall be filed under 139(1) due date only, as per the Act and as per the rules. But there is a clarification. By chance 139(1) you are missing, at least by 139(4) file the return of income. So there is a clarification. So only in an emergency case you can use that 139(4). Now 139(4) due date is December 31st, 3 months before the close of the assessment year. So a belated return you can file, but you are inviting several problems. The CPC will ask, according to CPC, there is no such clarification. As per the Act, you are not filed. I am levying the tax. Then fighting. So much appeal, so much difficulty will be there. Let us comply the law. But in the September month, if you are having shortage of time, give preference to charitable institutions, public religious institutions, file the form 10B or 10BB in time. Even if you postpone the tax audit things, nothing will happen. Damage is less. Nothing will happen. You cannot say penalty will be there, but damage will be less. Whereas damage to these institutions will be huge. Without Section 11 exemption, huge tax liability will come. So one must be careful in getting these audit reports, complying on this. So what is this 10B? Just like your 3CA, 3CB tax auditor seminars you would have heard in the YouTube, hundreds of tax audit YouTube seminars are there. So the first part, 3CA or 3CB, is true and fair of financial statements. Here also this 10B or 10BB, first part will be part A or part 1 will be true and fair of the financial statements you're saying. And there in 3CD, statement of particulars you are having. Here also the statement of particulars, which are in the second part, either in 10B or 10BB, you are having part ABC of this 10BB statement of particulars. Both are not similar, but the object is a similar object, either in 10B or 10BB. As I told you, 10B is for 12 AB registered institutions, 10BB is for 1023 approved institutions. So in both the cases, what they want, what is the gross income? Have you applied 85%? If not, have you accumulated? What is the amount of accumulated? In the early years accumulated, as you have not satisfied the conditions, in the early years accumulated because of violation, is there any taxable income this year? So like that, the questions in 10B and 10BB are about the gross income, application of income, conditions of income. And in 10B, last part is for related parties, just like your business 40 capital A2, The related party transactions, is there any benefit passed on by this entity, trust or institution? Has it passed on any benefit to that related party? Sir, for one financial transaction, depending upon the person who is looking at the transaction, both ways can be interpreted. The managing trustee's common problem is they take the salary. As I gave you in running a school, wife and husband, they have taken the salary. They are earlier working in a government, say institution. So resigning that, both wife and husband have come started the school. They take the salary by check only, because 40 capital A and 40 A both are applicable mutatis mutandis to these public charitable institutions. So subject to TDs also, they have 100% complied the law, they have taken the salary. So the auditor has to necessarily mention what is the amount of salary. Just like 40 capital A2, you should not say excess or unreasonable. The assessing officer will decide under 40 capital A2 for business. Here also, the assessing officer has to decide. So the related party transactions as it is in the audit report, the auditor has to mention. The moment you mention, the assessing officer will say, you have given your building for rent to the society. Oh, that rent may be abnormal. Prove that it is reasonable. You have given your money as a loan to the society. Prove that the interest rate you have taken is reasonable. Prove that the salary you have taken is reasonable. So that reasonableness, every year, the auditor must preserve something so that reasonableness, say, in the department's view, department thinks that the trustees have got, executive members have got the benefit. Whereas in the executive's view, we have taken less salary, more benefit is to the society. We are not getting any benefit. So we have very consideratively, we have taken a lower rent, lower salary. So they have to prove it. What is the work they have done? To do such work, a competent person, how much salary they will draw. Number of case laws this side, that side. So one should not invite a problem by mentioning all these things. One should be ready to face the questions from the department while filling up this. We'll see it at the end. Actually, the most important thing because of the recent amendments is your income. The definition 224 includes voluntary contributions. Second, section 11 gives the exemption for specific corpus fund donations under section 11(1) small d, provided from 22-23 assessment year that corpus fund donations, that capital receipts, you identify separately and invest, deposit, either you deposit or invest as per section 11(5) only. So the corpus fund donations all these years were not conditional. Once it is a corpus fund donation, keep it separate. The other income only you apply either for revenue or capital expenditure. But now that route is blocked from 22-23 assessment year. What is it? If you are having corpus fund donations, capital receipts, then you should identify them separately. If you are satisfying the section 11(5) conditions, that is deposit or investment in approved, identified institutions only, identified modes only, then it is exempt. Otherwise, say they become normal income and 85% you have to apply. By chance, you need the money for your regular salaries, rent, electricity, regular maintenance of the charitable institution, maybe in old age home for feeding, food itself you are not having. So even though the donor says corpus fund donation, my deposit you keep in the, my donation you keep in the deposit interest only, you specifically said donor. But for day-to-day food itself, there is no money. So use it. But the Act amendment says in the later years, when you get sufficient income, you make good the deficiency. From the later years income, if you make the bank FD and identify that this year's corpus fund now I have kept as the deposit, then we'll give the exemption for that income. That amendment also has come positively only from 22-23. This amendment has come. So the condition satisfying income of the year, you should identify. Is it from the main objectives income? School, students' fees is main objective income. Interest from your investments income. Maybe sale of assets, separate capital receipt. Maybe loans raised, a capital receipt. So the income, or say the receipts and payment account, which I am going to show you after some time, is revenue receipts 3 types, revenue payments also 3 types. You should separately identify apart from the administrations. Capital receipts 3 types, capital payments also 3 types. So conditions to satisfy that income exemption, you should bifurcate them whether you have satisfied these conditions or not. You should see. As I said, positive conditions will be there. You should apply 85% of your income. If there is a shortfall, 2 routes are given, either to apply the shortfall in the immediately following year for any of your objects, or for a specific object, specific purpose, form 10 in the 5 years. Both of them electronic forms you have to file before filing the return. That is the option choosing. So that is the positive condition. Apart from auditing, audit report shall be filed, return has to be filed. There are some negative conditions also, that is, you are prohibited from applying the income for other than the objectives. What is that prohibition? If your objective is education, you should not do relief to poor. Flood relief, the school gave 5 lakhs. 5 lakhs giving to flood relief victims is relief to poor activity, not your education. Your objective is purely, though both are charitable, that 5 lakhs will not be considered as application. You have applied for other than objectives, you may lose your 12AB registration also. Other than objectives you apply, strictly as per objectives. So some people will have 2-3 objectives. Then while auditing, which objective, which expenditure have incurred, you are not, apart from general administration expenditure. Because in ITR 7, administration expenditure you should see, say, mention separately, and objectives wise, for which object how much you have applied also, you should see, keep the money separately. So your money always shall be as per section 11.5 mode only, and you cannot, sir, any organizers want a 5 minutes break?
Yes, sir. I am asking just, sir, do you want a tea break for 5 minutes?
Yes, sir. Yes, sir. Thank you.
Okay, sir.
We will go for tea break and we'll continue after 5 minutes. So another 1 hour 15 minutes, my presentation will be there. Then question answers for half an hour for all the questions we will answer, sir.
Yes, sir. Yes.
Are the members say in agreement with this? Is there any difficulty for members, sir? No.
No, sir.
Okay. Okay. Thank you. 5 minutes break we'll have. Okay. Manoj. బాబుని కాఫీ పంపి బాబు నాడా Hello?
Yes.
Sir, shall we start? Hello?
Yes, sir. We can start, sir.
Yes, sir.
Okay.
So the conditions we have to satisfy while doing the audit, what are the negative conditions, whether they have applied, they have caught in these negative conditions or not, we have to see. So as I told you, generally I have mentioned these 10 conditions. So the registration is the first number one must for these organizations, except those in the beginning I told you without registration, without approval they can get. For all the other things, this is the section under which registration is made mandatory. Then during the year, if you have adopted or modified any objects. So please see, as I told you, yours is education, but you have donated to a relief to poor activity. So then it seems adoption of other objective within 30 days, if you apply for re-registration and you get that re-registration, then you can continue the registration. Otherwise, within 30 days, if you are not applying, either by passing a resolution specifically, within 30 days, you should apply for re-registration. So this may be the first year, this may be the second year. So anytime after getting the registration, same objects you should continue. If you want to adopt an object by your activity, or if you want to modify by passing a resolution and as per the procedure amendment of your bylaws, you should get the re-registration. Then audit and submission of audit reports within 30 days prior to the filing of the return of income is made mandatory. Many people have forgotten last year also, along with the return, audit report along with the return. So sleeping over is not. Audit report shall be filed 30 days before the due date of filing of the return. So last year it was a first year, and again this year also it is being repeated now without any due date extension. By September 29th, audit report shall be signed, and September 30th, audit report shall be filed by the latest. So then October, the filing of the return, or September itself, after filing the return on September 30th, the audit report, same day also file the return, no problem. But due date must be complied. So similarly, filing of the ITR 7, as I told you in ITR 7 filling up, which section you are claiming exemption. And say, here I would like to stress, in case of unregistered under the Income Tax Act, as I told you, below 5 crores education institution, you are filing the ITR 7 within the due date, because there is no Income Tax Act prescribed audit report 10B, 10BB. In the month of September, you may not be able to do. So many people have asked me, sir, is it July 31st for these below 5 crores education institutions? Is it the July 31st? Because there is no audit report. Those who are getting audit report only, the October 31st is due date. Otherwise, July 31st. I gave them the answer. Yours is a public religious institution, public charitable institution, public educational institution. You are bound to get your books of accounts audited. 139(1) proviso explanation says, the explanation says, in case any institution under any other act also it should get audited, then also the due date is October 31st. So under any other act you are getting audited. That's why below 5 crores also you are filing the return by October 31st only, not by July 31st. So then any other act audit report also you try to file along with the return of income. Up to 2021 assessment year, when you are filing the audit report or filing the ITR 7, never it was asking you the audited copy of income and expenditure or balance sheet. Now for 21-22, it is asking you, where is your audited income and expenditure audited balance sheet? Please attach it. Similarly, for this below 5 crores also, you attach. Now attachments are permitted. Earlier attachments were not permitted other than the specified. Now everything is permitted. So now for along with the ITR 7, you attach your general audit report, not the 10B or 10BB for the below 5 crores thing for whom the return is filing is mandatory. So in the ITR 7 inside also, have you got your books audited? Tick yes, sir. So not necessarily 10B, 10BB, because any other act you are getting the books audited. For example, this Section 8 company, under the Companies Act, it is first mandatory. And again, 10B, 10BB also, because you are registered under this thing. So that Companies Act accounts audit report also you have to attach along with the ITR 7 if it is a Section 8 company. If it is a society, under the Societies Act, audit is compulsory, accounts approval is compulsory in the AGM. So all these things you try to attach. Then the CPC can understand that though it is not a 10B, 10BB covered, but return filing is compulsory. So with the audit report, the accounts they have. Right. So this is how you should file the return of income, and then 85% have you applied, you should calculate. So if it is more than 85%, no necessity of any accumulation. If it is less than 85%, for example, 82% you have applied, then for the 3% shortage, that money you should identify and where you are going to keep the money and how you are going to use the money. As I told you earlier, the two routes of accumulation, either Form 9A or Form 10, you should choose and then file them electronically. And whatever you have accumulated will be there in the 10B or 10BB. It will ask you have under which section. For example, 9A, Form 9A, if you want to file, Section 11(1), Explanation 2. If you want to file Form 10, Section 11(2). And Section 11(2) gives this thing. So correct section you should tick and correct say form you should use, and to the extent of that money identify. You may have 10 FDs, 20 FDs, but Form 10 filed accumulation money of 5 lakhs where you have kept in so and so bank, so and so FD, you identify. That's how the Act expects you. Then 11(5), all other general funds also you should keep deposits or investment in prescribed modes only. This word 11(5) is more relevant for this 22-23 because the corpus fund donations must be kept in 11(5) mode only. So I advise from 1/4/21 itself, I advise people to maintain 2 separate receipt books: general donations, general receipts, corpus fund donations. So these corpus fund donations say open a separate bank account, and then the corpus fund money don't use for a general purpose. If it is permitted, if it is possible for you in the financial management, then corpus fund money you keep in the separate bank, and that money either use for land buildings, fixed assets which are permitted in 11(5) mode. If it is a temple, use for purchase of jewelry, which is permitted, for immovable property, for the objects, furniture, jewelry, like that, or in post office deposits, national savings certificates, nationalized bank, scheduled bank, they didn't say nationalized, scheduled bank deposits. So all the nationalized banks also cover in scheduled bank. So 11(5) permitted mode only, you should keep the corpus fund donations and report in the ITR 7 properly. If you don't keep this money identified and invested or deposited, then filling up of ITR 7, it results into a taxable income. Thereby, you have to do it. Similarly, negative conditions, there are if you see section 13(2), section 13, subsection 2, if you see, you will find number of examples, what is reasonable, what is not reasonable. Buying shares and other property from the trustees must be less than the market value or equal to money. Selling the trust property, land or buildings to trustees must be for a reasonable price. So loans, rents, expenditure, salaries, like that, all these things are covered in section 13 to illustrate examples in the act itself. Then the last, another one which I want to mention, for the past few years, the business disallowance sections, you are having 30 to 37 business allowable sections, 30 to 37. Thereafterwards, disallowance sections. So such disallowance section, cash payments more than 10,000 per day per person is 40 capital A3. It should be through bank channel. Any expenditure liable for TDS. So earlier it was not there. Now for these non-profit organizations also, the TDS provisions are mutatis mutandis applicable. From the day they are made applicable for the past 2-3 years, people are thinking, sir, in my 15%, 85% I complied with TDS. I complied through bank. That 5% is 6%, 8%. I have not say complied the TDS. What is there? It is exempted, no? Up to 85%. If no, please kindly understand. Whatever may be the small amount, 1%, 5%, 8%, 10%, whatever may be the percentage is not material. Whatever the violation is there, that is 100% taxable income. Please understand, by strictly reading the law, you will understand. By superficial reading, you may not get the real meaning, but strict reading, the spirit and the legal interpretation is, if you violate 40 capital A3, cash payments more than 10,000. If you violate any expenditure more than say the TDS permitted limits, for example, construction repairs, more than 30,000, your building repairs you have given more than 30,000 rupees, then 194C will apply. Some festival advertisements in papers you have given for pilgrims to attend. So all capital expenditure, revenue expenditure, which you are saying is a application, these TDS provisions and these cash provision limits you should apply. If you don't apply, to that extent, it becomes taxable income. Nothing can be say avoided. So the capital expenditure in 2015-16, 11.6 was amended that if once you claim any capital asset which is eligible for depreciation, capital assets cost if you claim as full application, subsequent years for accounting purpose, though you calculate every year depreciation, maybe WDV income tax depreciation, you are not entitled to depreciation because original cost itself you claimed 100% as application. From your income you have applied, you acquired the asset and shown it as application. So then you are not eligible for it. So every organization from 15-16 shall maintain fixed assets, which is otherwise known as PPE, plant, property and equipment schedule. Now, whose depreciation is eligible for computation as application, which assets cost or WDV is not eligible for depreciation claim. Two separate say groups you should maintain. Clubbed depreciation only you should show in the income expenditure account for arriving the true and fair, but the depreciation which is eligible, which is not eligible, year to year you should identify separately. So the decisions on these things, even now for earlier whose cost has not been clear. For example, 10 years back, you constructed the engineering college buildings 10 years back with bank loans. So now, in the year of construction, it is with bank loan. So obviously no income, no question of claiming from the income the cost of the buildings as application. So those buildings even now, even after 15-16 year, even now 2021 or 22-23 assessment year, you can claim depreciation because the original buildings cost has not been claimed as application. So even now after the amendment, for before the amendment assets are after the amendment. Those whose cost has not been claimed is 40 capital A3 and 40 AIA from 1920 assessment year. These are there. And then the compliance requirements of any other law. This is more important from 1919 from 2021 assessment year. Supreme Court said in the case of education, because of the Right to Education Act, every public education institution other than the government shall reserve 25% of its seats to public. Whoever wants, who is of the poor category, they should admit in their first class. So not necessarily in other classes. In the first class, first admission, every year, 25% you should reserve them. If that boy continues second class, third class, up to 10th class, he can continue in the same school. So at a government fixed fees, no other fees. So for others also, if the state government has fixed a fees, any say high school, class wise, this much only they should charge, because capitation fees is prohibited under the law. Even now, unknowingly, those who are not filing the returns, some schools show ordinary fees, building fund fees, some other capitation fees they are writing, which is prohibited by law. If the government is coming to know of it, their recognition, school recognition, they may lose. But here, the Income Tax Act says, if achieving the objects for purpose of achieving its object, if any other law is applicable, for example, in COVID time, every state government for COVID test take only 600 rupees. For some other MRI test, take only 2000 rupees. So like that, government fixed in the COVID time 2020 and 21 some restrictions on the amount to be collected by the hospitals. By chance, such public non-profit motive hospital violated the law. In majority of the cities, we have seen the governments have conducted the raids because of the complaints and proved such hospitals have violated. So any other law in its main objectives has violated. Small violations like a school bus traffic signal violated is not a violation for this purpose, because it's not for the objects. For main objects achieving only, if any other law is violated, it is no longer a charitable purpose. It loses its section 11 exemption. Compliance of any other law is very, very important. Once it is proved, that means somebody alleged it. Have you appealed? Finally, have you got the final order in your favor or in the department favor, government favor? Then if any order, direction or decree proves that you have violated any other law, then section 11 exemption you will lose. So one should be very careful. So this is in while auditing also, the auditor should examine from this angle also. Now I am coming to the capital receipts. In the sense, normal capital gains sections 45 to 55 is not applicable for this public non-profit motive organizations. So if you sell any land, if you sell any building, if you sell any asset, these capital gain sections will not apply, as I told you in the beginning. So how to get the exemption of capital gains? So this section 11 itself is having a separate subsection 11(1)(a). What is this 11(1)(a)? It specifically states that if the sale proceeds of a capital asset are invested in acquiring another asset, just like your section 54, residential house you sell, you invest in another residential house, the gain, not even the sale proceeds. Whereas 54F, if you sell any property other than the residential house, a vacant site, 54F says gross sale proceeds you should invest in a residential house. So if the gross sale proceeds, if you invest in a residential house, 54F exemption you can claim. Similar to 54F, which are all normal income tax assessed. These public, charitable or non-profit organizations, religious institutions, if they sell any asset, if they acquire another asset, any other acquired asset, then its total capital gain is exempt under section 11(1)(a). Acquiring another asset means, because they are doing public charitable work or religious work, the CBTD has issued an instruction in 1975 itself saying, investing the sale proceeds in a bank FD also, which shall be for a minimum period of 6 months, shall be treated as new asset acquired with the sale proceeds. Total capital gains are exempt. So just like your 54 EC for other people, here ordinary bank FDs are given as, that is section 11.5 bank FDs are given as new investment in a capital asset. So the sale proceeds must be invested. When? In the same financial year. If you are not able to use it in the same financial year, immediately it becomes ordinary income. Section 11, one small a will apply. 85% you have to spend. 85% you have to spend is there. Yeah, not spend, apply. The word apply, correct word. Apply includes revenue, expenditure, capital. So if you are not able to use the money within the same financial year, either you file Form 10 or either you file Form 9A, it becomes normal income. So while selling, while transferring the capital assets, one must be careful how to use the money and claim the exemption given specifically for these capital assets. That is the capital gain exemption. So now the new asset, for example, one land you have sold, another land you have bought, another land, how long you can keep? It didn't say any limit time holding period for the new asset. Only for bank FDs, the CBTD notification, that instruction has said minimum 6 months you keep. Courts held when for other assets you have not given any time limit, even for the bank FDs 3 months is also sufficient. Yes, courts held, yes, even lesser than 6 months also is valid, though CBTD has mentioned. So anyhow, you try to satisfy the conditions. So positively, thereby capital gains can be claimed exemption. But here one word of caution, the new asset must be for your objects. You cannot say, school, sir, I will buy the gold. Gold is also a capital asset. No, the object's sake you should acquire the assets. So you cannot say any asset. So the activities must be for your objects. The money shall be, the intention of the government is the corpus shall not come down. One capital asset sold means again acquire another capital means your corpus shall not come down. You should not use it for merely revenue expenditure. Ultimately, one day you have to close the charitable activity. So that is not the intention. You must continue the activity means you should preserve the capital and the capital assets. That is the intention behind this thing. Courts held so, not my interpretation. So now for 22-23, the corpus fund donations, as I have been time and again 2-3 times I have already mentioned, the 22-23, the new amendment is corpus fund donations must be maintained specifically. The words you should understand. Lot of meaning is there. Maintained specifically. What is that? If you once receive the corpus fund donation, you should preserve them. That means you identify them separately. That's why, though the act has not said separate bank account, I advised personally. So, and that money you use for section 11.5 modes only, either land, building or FDs. If you are not able to use it out of necessity for your day-to-day expense, then you are not choosing the option of 11.1D route. So you are using them as ordinary income. But in the later year, in the year in which you again keep the money in the 11.5 mode FDs, 11.5 mode investments, then that year, from that year income, you can claim separate exemption, because this year you offered them for normal income. In the subsequent year in which you are able to get more income, keep them instead of using for revenue expenditure. You can go for this 11.5 mode deposit or investments. So this is the specific for only from 22-23. Earlier, without this condition, you were claiming exemption of 11.1D. Now, with this condition satisfaction only, accordingly, ITR 7 for 22-23, you should fill up. Yes, I have received these corpus fund donations. I have kept them. Earlier corpus fund donations also are corpus fund. Yes, I kept in this. Earlier corpus fund opening balance in assets, you must identify separately. For 22-23 assessment year receipts and 22-23 investments, you should keep separately. Accordingly, in ITR 7, you should disclose separately. So now the continuation of the same thing. So in the year in which you deposit, you will get the same exemption. Now loans. So loan is a capital receipt. Loan or borrowal, the words used in the act. So the loan, with the loan you acquired any asset. Sometimes loans may be for revenue expenditure, doesn't matter. So the loan is a capital receipt. So within the loan, whatever the application you make, whether revenue expenditure or capital expenditure, is not an application in the year of availing the loan. Whereas in the year of repayment of loan, it is taken as that repayment shall be not from capital receipts. The repayment must be from your income. So the loan repayment, borrowal repayment, if it is from the regular income, in the year of repayment, it shall be treated as application. So this is specifically, earlier courts decided like that. Now the act amended specifically explicitly, otherwise impliedly earlier. Now with explicitly, this repayment of a loan is treated as application. So another amendment is courts sometimes have given 1 year excess expenditure, excess application shall be carried forward for subsequent years to set off. Those section 70, 71, 72, like loss carry forward sections are not there. Depreciation carry forward is not there. Here, no loss or allowance, you please see, no set off or deduction or allowance. That means only because of depreciation you got X application. Even then you cannot say that we have carried forward. And for subsequent years you shall be allowed. That is prohibited. Against the court regulations, the law is amended saying that it is prohibited. So no question of carry forward. 1 year excess means that's it, gone. No question of carry forward. So the earlier there is a 6th year application. Though you filed Form 10 for 5 years, in the 5th year also you have not is the accumulated money. It will can use for purpose. Was the old law. Now the amendment this year for 23 is no question. In the 5th year, if you are not applying, neither you have withdrawn the FD, nor you have applied it for the object for which you have accumulated, then in that case, it will become the income of the 5th year, not the 6th year. So from that accumulated money, you cannot give to another institution. So any from normal income or from the accumulated income, you should not use the money for some other trust by giving a donation or gift. So it must be. Then in Form 10, many people repeated the objects clause object only. In the memorandum of society registration, whatever the objects are, those objects they repeated. So some courts gave a favorable decision, it's all right, but the other courts gave a negative decision. So it's for specific purpose you should accumulate. So purpose is subservient of the object. So you mention in Form 10 the purpose. In 9A, no necessity of purpose, simply next year, whatever may be the purpose. Whereas in Form 10, purpose is important. So you identify the purpose. For example, yours is a hospital. So to buy the MRI machine, CT scan machine, or to buy the ambulance, to establish a blood bank, change of object also is permitted under 11.3A. So the accumulation is under 11.2. And in case you are not able to use that accumulations, 11.3 will apply, and 11.3 capital A gives the permission by applying to the assessing officer, jurisdiction assessing officer. Even sometimes the purpose for which you accumulated 4 years back is not possible in 5th year, you apply for change of purpose, the assessing officer will permit you, then for your specified purpose you can use it. So the 43B provisions, will it apply? This is from 23-24 assessment year, 23-24, not 22-23. Cash system of application only is recognized now. For your income, it may be overall you may follow mercantile system or cash system. 2 systems are available, as we know, as we are having in 145.2 for business and other sources. For these charitable institutions also, you can follow totally cash system or totally mercantile system. But from 23-24 assessment year, because many people are saying on accrued basis expenses, whenever they are meeting their liabilities, the act is amended now saying that similar to 45B, that any income being applied shall be on cash base only, allowed as application, no question of accrual basis from 23-24. But in the transition year, the earlier accrued expense also you can have this. And I am giving you the case law that change of accrual method to cash system also is possible. So trust can change from mercantile system to cash basis. That's I have given you CET versus Ganga Charity Trust. So this relation, so you can change from mercantile to cash because for a accounts audit true and fair one method of accounting, and for computation filling up the ITR 7 cash basis, maybe it will be difficult. So either you can continue it or you can go from one system to cash system as they have recognized. Okay. For example, even in the cash system, if the check is given on the last March 31st, which day it is? So if the check is honored subsequently after April 1st, it is paid in the previous year itself. So for that also I have given you edition, old edition of 1954, that if the check is given, check is dated March 31st, paid normally within 3 years, the check's validity. So even by extended, if the check is honored, then automatically the expenditure relates to previous year only, not to the subsequent year. So this is the cash system for 23-24, but 22-23 is not applicable. 22-23 in accrued basis is allowable. So, for example, government goes to is the grant income. So the conditional grants, are they income? No. So in the year in which you use the grant, it will become income. That means till that time it will be on the balance sheet liabilities. Government grants or FCRA grants will be shown as a liability because there are conditions embedded, conditions coupled. So in the year in which you use the grants, then to the extent of you use, it will become income and expenditure. Both sides should come. To the extent you use, remaining thing balance will be there. So the fund accounting institute has released what is meant by fund accounting. So please read the fund accounting. Fund accounting principles will apply for these government grants. So then you have ICDS, for example, a government grant shall be taken in the year of receipt. Okay, that's all. They will apply to these things, but ICDS as it is not applicable to this charitable trust. So then the 23-24 onwards, books of accounts maintenance is now made compulsory, but actually all these years for the past 30-40 years, either the 10B or 10BB says the institution has maintained the books of accounts. I have examined the books of accounts. In my view, after the examination of books of accounts, the financial statements are drawn from the books. These words are there in all these years also. Then what is the new thing in 23-24? Because some people argue that books of accounts is not mandatory. I cannot produce them, but they are prepared true and fair. Then the auditor without books of accounts, how he can say, I have arrived at the true and fair balance sheet, P&L account, income and expenditure account. So at least also they are applicable, but this year it is made specifically books of accounts. Both 1023C amendment is there, and because legal wording only for that sake only, but books of accounts and other documents maintenance is a must. So now come to the business income. What is business permitted? What is business not permitted? As I told you, advancement of another object, that is a separate business, separate thing. But for all the 6 clauses, advancement of another object is 7th class. So now for 6 clauses, business main activity is prohibited, incidental business activity is permitted. What is this? For example, a hospital. A hospital is a public charitable institution doing service to the public, charging nominal amounts. The amount it charges from the patient is equal to or just above the, or just sometimes with donations less than the expenditure. So then it is a non-profit organization. But it is running a pharmacy. It is selling the medicines. Hospital necessarily has to sell the medicines. So if a pharmacy, a shop is there in the same hospital premises, selling the medicines is incidental to attain the main activity. For example, you are having a temple. Whoever comes to temple as a sentiment, they take prasad. Can the temple sell prasad in Tirupati Laddu? If you come to Sabarimala, you will get that Aravana Payasam. So, or some other, say, Appam. So now, can the temple for millions of people sell less than the cost? Thereby, yes, sir, I am doing public service less than the cost. It is not business. It has to some 2% above the cost it has to sell, then only it will work out. Otherwise, less than the cost means if it is just like a sweet shop, everybody will buy the laddu of Tirumala and will mix it with his laddu manufacturing and sell in the sweet shop because TTD is selling for less than the cost. So that is not the intention. So any activity for profit, if you continue, it is business. And if the business is incidental, necessary to attain the main objective, either for religious activities, religious temples will sell the puja materials. Majority of the temples sell the puja material. So which is incidental main activity, is permitted. 20% of the gross receipts exceed no longer only for hospital, pharmacy, or for a school, engineering college, books and utensils. So like that, any charitable activity, the 20% limit will not apply, and it should be incidental business. The two conditions to be satisfied are separate set of books of account shall be maintained. It is covered by 11.4a. Separate set of books of account shall be maintained. 2, the income therefrom from the incidental business shall be used for the main objective, charitable purpose. So separate set of books of account shall be maintained. If no separate set of books are maintained, then it can be a cause for cancelling the registration. So from 23-24 onwards, though for 20-21 under earlier 12 capital A, 12AB for 22-23, subsection 4 and 5. Now substantial specified violation. Specific violation is defined when there is a specific violation wherein books of accounts separately not maintained for this incidental business is one of the causes. Money used for other than objects is another cause. Related parties getting the benefit is another cause. So like that, if specific violations are there, the commissioner who granted the registration can easily grant it under 12AB without least effort. Same least effort registration can also be cancelled. So violations are more important, not to get caught. We should know what is violation. In the coming 2-3 minutes, I will try to explain them. Thereby, we will go to the question answer. In the maximum 5 to 10 minutes, I will close this session and I will complete it. So thereby, the participants' questions I can take up. So the benefits to related parties. So the before amendment, decisions this side, that side are there. Any violation is there, any benefit passed on to related parties, total section 11 exemption shall be lost. Was there before the amendment. Now from 2024, not necessarily the total exemption shall be lost. Specific violated income shall be taxed specifically. New section 115 BBA, just like your 115 BBC, 115 BBE, 115 BBE. Any unexplained cash credit 69, unexplained investment 68 cash credit, 69 unexplained investment, 69C unexplained expenditure. So like that, which are covered under 115 BBA. Similar to that, 115 BBA from 23-24 assessment year onwards with 30% taxation for these specified incomes. The specific income section is amended. This is the latest amendment of 2022. Similarly, a specified penalty for the payments to related parties. First time 100% of the payment shall be liable. If the mistake is repeated second year onwards, 200% of the penalty, that is 271 AAE. A new tax rate section, a new penalty section has been brought in 2022 Finance Act, which are applicable from 23-24. Because 23-24 assessment means we are halfway through. We should advise the parties or advise the assessees to be careful. That's why these amendments, latest amendments are so important, applicable for the current running financial year related to 23-24. So not only the institution, because it passed on the benefit to a related party, institution is paying the tax and suffering. The person recipient also once again has to pay the same of income, same tax under section 56(2)(10), other source income. You received the benefit, specific benefit. Again, that section also will get caught. One should be very careful. So the impermissible investments. This is also, the money shall be as per section 11(5). By chance you violated, related parties partnership firm you gave for loan, then it is a violation. This is covered in section 13(1)(d). So if you do this, as I told you, the such investments income shall be under 115 BBA, taxable at 30%, and but no penalties for this provision. Only related parties transaction penalty. For this investment, only tax is there. It is the before amendment, after amendment, and this PPT I am leaving the branch. So once again, leisurely go through, because of time constraint, I am rushing through. So I request you to follow me. Then, impermissible mode of investment. Somebody donated his private limited company shares. What you do? Somebody donated jewelry. Natural, if it is a temple, jewelry will be donated, which you can use, permitted 11(5). Somebody for a school gives furniture. Some old students will give computers, new computers to the school, college, permitted. It is used for your objects. You need not convert them into some other mode. So somebody gives a private limited company shares to the college. What they should do? Within 1 year from the end of the year in which they got the shares, which are not permitted under 11(5), must be sold and must be converted into the permitted mode investments. That is this thing. And you are not permitted to purchase the private limited company shares. So the institution voluntarily shall not do. Sometimes involuntarily, if somebody gives, somebody donates those shares, which are not permitted. So impermissible mode of investments. You have not invested, but they have given it. You convert them into mode. Thereby you can comply the law. These are the decided cases. That's how you can see. So then the new violations, new section 13(10) sections are there. That's what I said. Section 13(8) newly says maintenance of books of accounts. Newly this thing, the return of income before the due date is also there. If it is not there, the conditions of exemption you will lose. So then specified income for the sake of 115 BBI, as I told you, specified income means more than 15% accumulation. You have not filed form 10 or 9A. You are not having the intention of getting the delay condoned also. I told you the commissioner is having the power to condone. Then 85% you have not applied. You have applied 70%. Then what happens? So out of 100, you applied only 70% means shortfall is 15%. So that shortfall 15% is taxable income. 30% you should pay the tax. Earlier, as per circular number 320, dated 11/1/82, our normal slab rates were there. That normal slab rates is removed. Now 30% tax is specifically given for such income. Similarly, for violated income, 13(1)(c), as I told you, related party benefit, passed on the benefit to related party, 13(1)(c), permitted mode of investment violated, 13(1)(d). So these are all the things which you can see as attracted. So then we'll go to say penalty, the new penalty section. As I told you, any unreasonable benefit to the trustee if you pass on for those specified persons, section 13(3), if you see, who are these specified persons? More than 50,000 given donor also, not only the trustees, not only the promoters, not only the executive members, even a donor who gives cumulatively more than 50,000, not in the 1 year, also is a specified person. If they get the any benefit, generally people give 1 lakh rupees, the temple will say, I will give you 1 room free for 5 days. 1 room free for 5 days, you are getting the benefit. You receive a donation means it should be unconditional, whereas you are giving a benefit. So if you are giving a benefit, the benefit is more than the benefit which the trust has got. If somebody can argue, then that benefit amount is 30% of that income which you are getting, the other person get benefit because of the institution. 100% is the penalty in the first year, and if the violation is continued in the second year, 2% of the aggregate income passed on to them is the penalty. New section from 23-24 onwards. Now, loans given is application. Sometimes the small loans you give for the benefit of the poor people. If the loan write-off, it is also application. If you show it loan as the loan receivable asset. Sometimes loans, for example, students, you will give the scholarship loans. You say when you join the employment, you give me back that scholarship, which I have given you now. Maybe after 5 years, maybe after 7 years. But till that time, you can write off it, and if you recover, it will become income. So like that, the controversies where they are there, I have shown you. So corpus fund donation given to other institution is not an application. From your income, for other institutions, regular income, if you give a donation, it is an application. For other institutions, corpus fund, if you give a donation, it will not be allowed as an application. So the specified income, if the books are not maintained, also your income will become specified income. So that's how they have classified. So one should be very careful about these words. So the specified income, one should be careful. It becomes a specified violation of 12AB4. Why I am saying 12AB4? For cancellation, if specified violations are there, it becomes a cause for the commissioner to cancel the registration. So these are all the conditions we are giving opportunity for the department to cancel the registration. If books of accounts are not maintained, when they came for survey, they will say that all the 6 years books are not maintained, but auditor has filed the audit report. So if the public religious temple is used for private religious purpose, then also if a charitable trust applied its income for a particular religious caste community, it should be for public in general. It should not be for specified identified people. If used, then it becomes a violation for cancellation of registration. So any activity, the same things in 1023 also repeated. Any activity carried is not genuine. That means only for paperwork they have built up. When the ground reality it is seen, they have not done the real charity work. Only bogus ATG donation receipts are given, and then bogus expenditure is booked. That means it is not genuine. Then registration can be complied with any other. As I told you earlier, the capitation fees received more than the prescribed government fees by way of building fund, this fund you have received, then also it can become a cause for specified violation. Definition is given, and once you fall in the specified violation, registration can be cancelled by giving an opportunity. So these are all there. So anyhow, quickly I am winding up. So the specified violation will give a reason, will give a cause for the cancellation. If once it is cancelled, then no question of section 11 exemption. And how to compute the income also they have specifically said. If there is a cancellation of registration, how to compute without section 11 exemption? Only revenue income plus capital receipts income minus revenue expenditure is taxable income. They said, you please see, I am repeating, revenue income plus capital receipts income minus revenue expenditure only. If section 11 exemption is not there, on commercial principles basis, these things are only allowed and the income is taxable. So one should be very careful about these things. So ATG also will, 112AB registration is cancelled, ATG also will get cancelled. And there is one section 115 TD. This is a accredited income, one word is used from 2016. This is there. Once registration is cancelled, 115 TD at maximum marginal rate, fair market value of the assets or liabilities, it is taxable. So one should be very careful about these things. So the decisions on this cancellation, which went up to tribunal or high court, including the Kerala Cochin 2022 decision, you please see. So about this 12AA3, the 12AB has come only to 2023, 12AB 3 and 4 I have explained, 4 and 5 I explained now. But earlier, similar to it in the old 12AA registration, cancellation is under 12AA 3 and 4. On that case, the Cochin Tribunal has given 2002 decision. I have given citation. If you go through the decisions, you will know how legally we have to fight. So again, if you rectify the mistake, you can, even after cancellation, you can apply for fresh registration. So the notice will be given by the assessing officer may identify. Assessing officer cannot cancel. He will refer it to the principal commissioner. Principal commissioner will give a notice. Within 6 months, he should pass an order whether to cancel or whether to not to cancel. So like that, time limits are framed. It cannot be say without any time limit. So then he should forward the order to the copy of the AO. So these are all the decisions I have given. So donations to other institutions I have already given. Anyhow, I have given this 2021 latest decision, specified violations. People may say that you have given to your sister concern. It is a violation. You have got the benefit. Trustees there and here also common. Like that they may give. But to avoid all these controversies, so I have given number of case law. So the Cochin tribunal decision, once again, the Muslim Educational Society versus CIT. So only for Muslim students you have given. So it is a particular community. Your school is a charitable purpose for anyone. So why can't it be violation? No, there are only 2 to 5% students are only Muslim students. So it cannot be called as a specific benefit given to a specific religious community or religious thing as education. So this is the Cochin decision. I have given 2011 decision. So like that, these are all the things to be looked into. So the subject is vast, but anyhow, given 2 hours time, I have tried to complete this presentation. So specified violations case laws, because number of notices are going to come. So for all those notices, you should be mentally prepared by going through these case laws only, how to give a fitting reply, how to fight. So this number of decisions only based on these violations notices, how to give the reply and elaborate and sufficient. In the first stage itself, we should object. So otherwise, after giving the decision and then going to tribunal, because the tribunal decisions have come, you cannot go up to tribunal. So better equipped with this latest case law, thereby it will be a fair chance law should prevail and the charity work shall continue. Okay, so these are all the same decisions I have given. It is suspicion of money laundering that cannot be a basis for cancellation. So like that, rule of consistency is applied. So these are all the decisions I have given. So after the cancellation also, fresh application can be filed. Without going to the appeal itself, go to the higher cancel, you should go to the tribunal. So these are all the things. So the form new registration, what is not there in the act, what is not there in the rules, this form 10 EIC while giving, they are given 18 conditions. So as we have agitated, again the CBT, though in the registration all the conditions should be with prior permission of the commissioner. If you want to sell old furniture, can you take the prior permission of the commissioner? Can you apply and get it? It's a very Herculean task from the commissioner to get an order. So these things they have removed. So instead of 18 conditions, they are now restricted to 8 conditions only through CBTD notification. So it is not there in the act. So don't go merely by the registration certificate of 10 EIC, wherein you will find 18 conditions. What conditions removed, what conditions are now prevailing? Try to go through, sort out whether every condition are you satisfying or there is a need to satisfy or not. You have to see this thing. Say, for example, no other act, no violation should be there either. TDS delay is there. Now in tax audit 3CD, you will say TDS delay. But is it a violation? No, it's due to some administrative inconvenience. In the charitable institution, employees may not be aware of fully all these things. A chartered account, we ourselves sometimes file the audit report belatedly, tax return belatedly. Then a charitable institution to comply all these things, TDS, not necessary. So these are how we should, this thing, ATG, the last but one slide. So ATG from now only, from 22-23 assessment year, for the donations received before 31st May, that is within 2 months from the end of the financial year, all the donors' names, phone numbers, their ID, you should upload in Form 10 BD. So just like in 26 years, it is going to be get reported, these are the donors. So who the institution is eligible for ATG, the donors also are eligible for a deduction, ATG deduction. So the 10 BE certificate has to be issued by the institute. But after uploading, just like Form 1616A, 10 BE is the certificate. So now CSR expenditure is also eligible for ATG deduction, because CSR expenditure is not permitted either under section 37 or normal business sections. It is permitted to have the ATG deduction, but if you give as a donation, you can claim ATG reduction. If you give as expenditure, it must be subjected to TDS. Your expenditure is not eligible for ATG. So if you give donation, no TDS. So PM Cares Fund similarly is eligible for CSR and is eligible for 100% deduction. So this is how you should see it. So I thank the Kottayam branch for giving this opportunity of presenting what little I know. The subject is vast, but the time is limited. So within the limited time, I have done what is possible. So now I request the organizers to give me the questions. I will close this thing and then we'll go to the question answer, please. Yes, please. Sir.
Thank you, Phalgunakumar, sir, for the excellent presentation. Now
Sir.
we request, sir, which way you would like to take the question? Would you like the
Question?
members to as a chat, or you want them to come online and then give the question to you?
Organizers, how it is easy. If they can, in the chat box, it is there, cut paste you can do on the screen. If you can appear, then it is much better, because the accent and
we will-
sometimes we miss it.
Okay, what I suggest now is, sir, we will ask the host team to read the question so that only one person is there to interact. So that way we will try to control. Okay, sir? Sabu sir, okay, no? Okay. Arun? Dear members, please post your questions in the chat box. Host team, he will put it across. That pressing need, we will allow you to come online and then have a direct discussion. Please post your questions.
Yes, sir. From the chat box, one can read and ask me the questions. I can give the answers, please. Sir, if there are no questions, I will show you the receipts and payment account, how to do it, all these things. Any question?
Bale sir, actually you are not audible. Still something you are not audible.
Sir, shall I see the chat box and then the first question? First question, clubs like Rotary, Lions, etc., do they come under mutual benefit entities or charitable? If mutual benefit entities, then which forms to file? Very good question. So the first question is, Rotary, Lions are not mutual benefit entities. First thing, their dominant object is to serve the public, only to exclusively for members' education, members' benefit. For example, apartment residents association, it will not do any activity. From 40 apartments in one building, 40 apartment building owners will form an association. That is a mutual benefit association. Traders, cloth merchants association of Kottayam, only for their benefit, members' benefit they form. Lorry owners association, they are all mutual benefit entities. The Income Tax Act, Section 44, deals with these things. For example, any trade commerce association is for public. For example, advocates association, lawyers, bar council, their association is organizing lectures like CPE seminars to the members, but their dominant objective, if you see, that they do the free legal aid to the poor, they represent the cases. Trade associations for the public knowledge benefit, they are doing more work. Then you exclude the mutual benefit income, members' contribution income side, members' expenditure on the expenditure side, you exclude both of them. From the other income, if they are doing public service, for that only file the ITR. For mutual benefit, members' contribution income and the members' related expenditure exclude in the same financial year, partly the mutual benefit, partly public charitable also is eligible for 12AB registration or earlier 12A registration. So on these things, CBTD has clarified, no doubt about it. Purely mutual benefit associations are not eligible because it is not for public. Whereas partly mutual benefit, but dominant object is public service, definitely is eligible. And both the Act and the CBTD notifications are given, decided case laws are there. This is the view. So there also, what about trade, commerce, and industry associations? In which category shall they be classified? You see the objectives and you see the expenditure and income. So if they are doing more public service, they are entitled to 12AB registration. You exclude that mutual benefit transactions, members' contribution related to members' expenditure. Remaining thing is public contribution. It is a public institution. It is eligible. So this is the answer. Yes, sir. Next. Third, clubs and associations running businesses and having a turnover above 44AB limits. Then are we, sir? A club or association running a business is not incidental. I told you only a, for example, Rotary Club is organizing a blood bank. Blood bank, you cannot do charity. Blood bank, Rotary Club in number of places throughout India is running blood banks. They collect the blood by donation. Members, human beings will donate their blood and the blood bank will sell the blood. Why I say blood bank cannot give the blood freely? To preserve the blood, 1 unit of blood needs roughly around 500 rupees expenditure. They should segregate the collected blood, red cells and white cells, plasma separately. The segregation needs 200 rupees. Preservatives need some chemicals and preserve them in the deep freezer box. And that particular blood group fellow, whoever comes for that blood, then they have to give for 500 rupees, 600 rupees, 1 unit. Then it is not a business. The intention is not to collect some profit. The intention is to serve. Then it is not a business. A club, Rotary Club donating a blood bank is not a business. But the Rotary Club runs a pharmacy, medical shop. Though profit is less, generic medicines shop is run by a club. Definitely it is a business, not eligible for exemption. So 44AB audit report, and it is not eligible for, though you file the 10AB, it is not incidental business. So your income is fully taxable. So that's how the interpretation shall be given. In the guidance note 44AB given by ICAI, we have, sir, 1 minute, chat box. I am reading the chat box. Oh. Sir, in the guidance note of 44AB given by ICAI, we have a clause in part A saying that financial statements is the responsibility of management. Can we say that this in form 10B? Sir, financial statements preparation is their responsibility even in 10B or 10BB. You are saying I have verified those books of accounts. True and fair opinion I have formed. By repeating that by management representation letter MRL taking, he is not going to relieve the chartered accountant from his responsibility. It is the responsibility of them. I have simply signed them. You cannot say that. Once you are signing signature means you have audited, you have verified, you are forming an opinion true and fair, subject to SA 700, SA 520, all several things will apply. Auditing standards will apply, accounting standards will apply. Then only we cannot merely say it is the management's responsibility. That is not the correct answer, sir. Once you are signing audited means we must take the responsibility. Really, you should do the audit and then take the responsibility. Then shares bequeathed as per will to a trust, can the executor sell the shares and transfer? 100% value. This is how it is being done. Majority of the trusts in India, old age people, they write a will. After my will, after my death, the will come into operation. My land, my building, my agricultural lands, my residential building shall go to a charitable purpose of running a school. For running a school, how can there be agricultural lands? One has to sell them. Similarly, private limited company shares or listed company shares, you must sell them. You must first open a demat account, get the deceased name replaced by the trust name, create the trust. Trust, many a number of times, trust gets created only after the death because of the will. So the question is answered positively. Executor has to sell and then transfer them executor not in his name. Okay, the will is being coming into operation through the executor. If the deceased has appointed an executor, then the executor has to get the shares transferred in his name and then transfer them to us. Executor is a intermittent trustee. That's how it shall be done. Executor himself shall prepare the trust deed and then transfer them. While uploading the ITR, should we put yes against the audited party? Yes, if you are having an incidental business, then that incidental business, irrespective of the turnover, you do the audit for that also, because the main institution is audit. Then that business audit must be under 44 audit report. Then also you upload the audit report, and then along with the ITR 7, you enclose it. That is the answer. Then, sir, no other question in the chat box. Any other question, sir? Other than the chat box? Organizers, whoever lifts their hand, show their hand, please give them an opportunity. We'll go by it, sir. Any participants? You please lift their hand, lift your hand, or in the chat box, you give your question. If they are not there, we can, with 2-3 concluding words, sir. As I told you, don't
Actually,
go
there's a
merely
question in the
by-
chat box.
Yes, sir.
There's a question in the chat box while filing Schedule J of ITR.
While filing the Schedule J of ITR 7, date of deposit for early arrears is date of early arrears is also to be uploaded. How it can be done, sir? Opening deposits, you can say simply like that. You need not use it. But current year, if you made the fresh deposits, you can give the date. For early arrears, you cannot go. So opening FDs in so and so, current year FDs with dates you give, not necessarily for the opening deposits. So that's how you should come out of it. Because they ask the deposit in which bank, which date, maturity period, date of deposit, date of maturity period. To the extent available is otherwise brought forward. Because 2 years, 3 years back, again you cannot call out. In the early returns, if it is available, you can copy down. Otherwise, you can say it. It's not a problem. ITR 7 is only rule oriented. The act is not specific. Act is not directing you to do all these things, but we will comply the rule to the extent possible. That is the way out, sir. Hospital running a canteen or school running a canteen is 100%. Sorry, school, all the people cannot bring their lunch, or say they would run without a breakfast. So school running a canteen, hospital running a canteen is a must, which is incidental. So incidental, if the hospital is running the canteen on its own, it is a business incidental. Don't worry. If the canteen is given on rent, if the canteen is given on rent, that canteen rent attract GST. So be careful. So if the school gives canteen for outsiders, then school must get registered under GST and must pay the GST on that canteen rent. Even universities give canteens on the rent. They have to pay. So GST, they must get the GST registration, because the school fees, university students fees itself crosses 20 lakhs. Exempted turnover plus taxable turnover is equal to GST aggregate turnover limit. So one should be careful in complying the GST law and income tax law. These are all incidental. Sir, any other questions, sir? Okay. Sir, if it is not there, then we can wind up, sir. Balaji, sir.
So
Any
I
other
think,
question, sir?
one more question is there. If corpus fund is utilized to purchase immovable property, chat box is there. One or two questions are there in chat box.
I'm not getting that question. You somebody read the question, I will
Yeah,
answer.
sir. Okay, sir, I will read for you. First one is, while uploading ITR 7, should be put yes against audited under section 44AB.
If it is there, incidental business is there, you are doing 44AB, yes, sir. Otherwise, no.
So
That is the answer.
Next one is, if corpus fund is utilized to purchase immovable property, how should the same be disclosed in the accounts?
That's what I say. In the accounts, normal income and expenditure balance sheet, the expenditure will be shown in the asset side. Capital expenditure will be coming in the asset side, and the corpus fund donation will come in the liability side. Okay, accounts part, don't worry. But in computation of income, the ITR 7 is having a EC one schedule is there, EC. EC means expenditure capital. One schedule is there in ITR 7. In that EC, expenditure capital schedule EC, you show this capital expenditure, which asset on which day you acquired, what is the cost. It asks you those details you give. That's how you should do it. Similarly, in the income side, voluntary donations also, what are the ordinary donations? What are the corpus fund donations? The ITR 7 is asking. In the ITR 7 only this bifurcation is necessary. In our accounts, income and expenditure balance sheet, the capital receipts and expenditure will come in the balance sheet. Revenue receipts and revenue income will come in the income and expenditure account. That's the answer, sir. Any other question? Clarified?
Sir, thank you, sir. Can you hear me, sir?
Yes, sir.
Okay, okay. So thank you. I think we have had a very invigorating session, and I take one more opportunity to just post the question. Our senior member, Sri V.K. Kurian, specifically asked this issue regarding Schedule J, where the figures are not matching. So you have rightly clarified that it is only for the current year that we need to show that with dates.
Yes, sir.
Agreed.
Sir, one question.
Hmm.
Sir, one question.
Tell me, sir.
Sir, in Schedule J, A2, the last two columns, investment under section 115, 15.5, and other than mode under section 15.5, sorry, 11.5. But one thing, if the amount is borrowed and it is applied or utilized for the purpose during that particular year, in that case, there will be no balance. But the schedule asks that if the investment under section, if there is no balance in the accounts, sorry, there is amount is utilized or spent for the purpose, but there is balance, it is to be paid later. But this schedule asks the mode of investment under section 11.5 or other than mode 11.5. I think there is no money with us.
You are right.
And
You are right.
Why we are trying to upload the return ITR, then it shows an error message.
Yes, yes, yes. I'm coming to your point. Sir,
Yeah.
from this year onwards, you may have corpus fund donations, you may have ordinary income.
No,
So-
borrowings. Under borrowings, loans and borrowings.
You may
Schedule
have
J.
borrowings also. Third type is borrowings also you may have.
Under Schedule J, A2, that means under details of loans and borrowings. I think we
Sir.
have no amount with us, but the amount is spent for the purpose. But we take it as application only when it is repaid. Then there is no balance, there is no amount with us. Then the schedule asks investment under section 11.5 or not. How can we
Sir.
give such details?
Sir, kindly listen to me. The
Yeah.
problem is you don't go by your income and expenditure balance sheet while filling up the ITR 7. For filling up the ITR 7, the receipts and payment account, which I have not shown you, but I will now send to the branch and you go through your receipts and payment account. Horizontally, you cut into above the line revenue receipts, 3 types. Above the line revenue payments, 3 types. Below the line capital receipts, 3 types. Loans, corpus fund donations, sale of assets. Similarly, below the line capital payments, capital expenditure, loans repaid. Now, the ITR filling up 7, your problem is you have received the loans. You might have received the corpus fund donations, but matching capital payments, investments 11.5 is not there. How can you show? You used it for revenue expenditure. So when you are filling up the ITR 7, to the extent your income, regular revenue income used for revenue expenditure only, you should claim as application. If you are claiming the loans met revenue expenditure, loan is the source, revenue expenditure met, it is not an application. You don't show it. If you show it, it will say mismatch, because for the corpus fund donations used for revenue expenditure, there is no 11.5 balance. Then it is matching like this. My receipts and payment as I have given you, it will match you. What is application? From your revenue income, if you meet the application, from your loans, if you meet the revenue application also, it is not an application. You cannot claim it that year. Only in the year in which you repay the loan, it is that year it will not be there. Loan repayment is an application in the So that's how. So unless you prepare line by line, horizontal lines of receipt and payment account, filling up of ITR 7, understanding from the income how much loan you repay, from the income how much you have applied, from the loans you have applied, from corpus fund you applied, that is not an application eligible. You should not show in ITR 7. That's so mismatch is there. Sir, this is the answer. Practically, one should do it like a workshop. This is the answer, sir.
So I agree with you, but the problem is that with the column 7 and column 8, there is no balance with this. Then how can we make an investment there? 7 and 8 column under A2. So
We'll,
there is no,
look into it practically, sir.
there is no balance to investment under 11, 5 or any other mode. Then the return, the column specifically asks whether it is invested. There is no amount with us, already spent, not applied, already spent. Then there is no balance with us. Then how can we invest an amount with having no balance with us?
Yes, sir. You show nil only. What is not there, you show as nil only. But what you have spent, you don't claim as expenditure. That's why it is showing.
The first column is the opening balance. Second column, you go through the columns and they give us an advice, sir.
Yes, sir. Okay.
So that practically, when we upload the return, it shows an error message. And some software also says that this return will be taken as defective also.
You should match, sir. Somehow, understanding the principles, you should match. There could not be a mismatch while filing the ITR 7. Matching is only by preparing a receipts and payment account. You can 100% match whether you incurred the capital expenditure from revenue or whether you incurred the revenue expenditure from capital. You should match and then fill up. Then automatically ITR will say matched. But without preparing the accounts, simply filling up ITR with the data means definitely it will be a mismatch. First, understand the receipts and payment account match. Both all the receipts must match all the payments. Then whether revenue receipts, how you have used. Sometimes revenue receipts will not match with revenue expenditure. Revenue receipts may be more than revenue expenditure or less than the revenue expenditure. Then the revenue receipts would have gone for investment. So you should match the receipts and payment account, then fill up ITR 7. This problem will not come. Have you prepared and receipts and payment account accordingly? Have you understood and filled up the ITR 7, sir? Ignore the income and expenditure. Ignore the balance sheet. This concept of revenue receipts, capital receipts, and matching, have you done it? Then only ITR 7 can be filled up. These are the answers. Okay.
Okay, sir.
Balaji, sir, as the time is running out.
Okay, we will wind up, sir. So,
good afternoon, sir. Balaji, excuse me. Prashant. Good afternoon, sir. This is Prashant Srinivas.
Good afternoon.
Past chairman.
Tell me, Prashant,
sir.
I'm listening.
Long time since we met, sir.
Yes, sir. Please tell me, sir.
I will exchange my pleasantries with you.
Thank you.
It was a nice presentation. We got enriched, sir. Thank you.
Any question, Prashant Srinivas? Any question?
Sir, regarding the question the previous member asked, he was telling regarding the opening balance.
Sir, opening balance sheet already matched. Opening balance sheet figures already matched. Don't worry.
He is explaining about a scenario where there is corpus fund in the credit side of the balance sheet. But that has been in the earlier years used for acquiring assets. That means in the earlier year, corresponding figure should have gone to capital fund.
Correct.
That has not gone, but the present audited balance sheet shows an opening balance in corpus fund, which is not represented by 11.5 investment. In such scenario, what to do? That is, I think, that is what he has raised the question.
My understanding of your question is, in the opening balance sheet, corpus fund is there and capital assets are there. Are there?
Yes.
Both are matching or not? The opening
exactly, there may not be matching, sir, because asset would have been acquired out of revenue also.
Okay, it doesn't matter. Your asset side and liability side matched, and your in the opening balance sheet there will be corpus fund or other liabilities. So the investments and other investments are current investments. Both may not match. Both may not match. You are right. Bank balance also may be the corpus fund may be represented by a bank balance also. Okay. So now there is no necessity of opening balance being matching. Only current year matching you should follow because of the taxation. Their intention is to assess the current year income, not the earlier year's income. Their intention of giving this ITR 7 is to arrive the current year taxable income. So they are asking you, corpus fund, is it represented by 11.5? For current year income, it is represented. Current year income will not be taxable. Opening balance is not matching 11.5. It doesn't matter. That's how you should represent.
So, sir, you suggest that while filling up ITR 7, we shall show the opening balance column in the corpus fund as 0 and show only current year receipt.
Correct. Current year, if it is matching, opening balance, even if it is not matching, it's all right. So every year they want to arrive the taxable income through ITR 7. For that purpose, they ask you the question. That's how you should fill up.
Okay, sir. Thank you. Thanks a lot.
Okay.
Okay. Phalgunakuma, sir. Okay. So we'll now wind up the session. Thank you so much for the wonderful effort. At very short notice, in spite of your busy schedule, you were able to oblige us by allowing the session to take place. And on behalf of Kottayam branch, for our chairman, vice chairman, treasurer Shine, I give our heartfelt thanks to you for the time that you have spent, sir. Wonderful. We would definitely want to trouble you more and more, sir. You are like a honey when you take food, and like Oliver Twist, we want more of this kind of sweet sessions from you, sir. Thank you very much.
Thank you so much. Very good. Okay. Bye. Thank you. I thank you
all.
Thank you
all members for the part.
Thank you. Okay.
Happy Onam to you, sir.
Thank you. Thank you. I too wish you. I must wish you Onam. Thank you to all of you. Please.
Okay.
Bye.
Thank you. Yeah, the meeting is now closed. Arun, we can now close the meeting, Arun. Now, for the benefit of members, the recording has been made. The recording link as well as the PPT will be shared to you very shortly. Thank you.
Samir, let's wind up with the national anthem, Samir. Hello.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड़ उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता